All right. Thanks, everybody. Welcome. Harmonic Pattern Podcast number 20. And I'm really happy to have the one and only Mitch Ray TA. Mitch Ray is in the house. So, everyone, big shout out to Mitch. Thank you, Mitch, for doing this. Let's make sure
How's it going?
you
How's it
are
going?
you in there.
Yeah, I'm here. Can you hear me? Can
Yeah,
everyone in the world hear me?
let's boost your levels a little bit and let's give you another proper shout
Oh
out.
no,
Mitch,
booster. A booster. Okay, I'll I'll do that. I'll take it. Yeah. So happy to be here. This is my first time on this stream and podcast, and I put money or a wager down that it won't be my last, but we'll see. I guess how today goes. Right, I might get expelled from Mr. Carney's
no,
stream if
I,
I
I
say.
don't think so. This is kind of an anniversary. I got to say, this is about the time I actually encountered your live streams and what you do. In the when things were getting super crazy back then, and they're crazy right now. But I think it's been for me, man. It's been really great to get to know you. I completely respect everything you've done and accomplished. What you do for technical analysis, and so I'm a fan, and I think everybody that's you want to get into the game, you want to learn technicals. Mitch is just killing it, practically 7 days a week. I'm glad you're taking at least one day a week off now, but a lot to go through, a lot going on that we can get into today. I'm just happy that you're here and we can
Yeah,
do
man,
this.
and yeah, and, like, I'm honored that you found me, and, I was able to find your work, and it really helped me refine, like, the harmonic. trading aspect of the system. You know that it instills your teachings and Richard Wyckoff's and Thomas Bukowski's and Mark Douglas, Paula T. Webb, David Weiss, and others. So, and what Wilder, even him. So,
Yeah.
yeah, it's an honor to be here. And what you've done in your books is unreal. Like is right up my alley. It's exactly what I like. So, I mean, if some of my viewers are in here, like you should be buying his books because if you want to learn more about harmonics, that's the place to do it. There's so many off brand or generic teachings that just don't do justice. And I didn't really know that till I started reading your publications. So yeah, man, that's where I'm at. But you're talking about you talked to me about a year, or you found me about a year ago. Do you know what the price of Bitcoin was year over year? Like this day last year, where were we at? Sitting at $19,200 right now. And this we were little did we know just uh let's see, a couple days from now last year, Bitcoin broke 20K for the first time in human history, right? We're just 2 days off of that. Wow. Times have changed, haven't they?
Yeah. Yeah. I think it's I've seen a huge, just an amazing kind of assemblage of people, like-minded people, people looking for quality content and wanting to learn. I mean, we're all challenged with the current environment, and I think the cream rises to the top. It always does. Of how when you get into these kind of predicaments, and we're all kind of looking for answers. Amazingly, it can bring people together in a special way. I feel like that's what happened with us, and for me, my harmonic pattern journey has been interesting to say the least. Never intended to do this. I never intended to kind of do books and do all this stuff. I was really coming at this more from an academic perspective, more of like a 20th century mindset of, I wanted to make connections. I wanted to do something on an academic level that kind of stood out for itself, and then build a career on that. And I actually got my licenses and became a registered investment advisor, did the networking through a lot of professional organizations. A lot of that was really helpful in my development. And boy, I was super lucky to do that. I mean, I really is something I got into. And maybe in the mid 90s, early mid 90s of the professional organizations, which there was a lot of the legends. I mean, guys, Sherman McClellan and Wells Wilder, and uh, even Bob Miner, Paul Desmond. There's just so many people. Louise Yamada. Um, I met everybody except for Wells Wilder, and I'm really lucky that I kind of was able to have those experiences. There's other people, Linda Ratchke, um, uh, Bob Miner, as I said, and Mark Douglas, of course, and Paula Webb. So many of these people were absolutely played a part in my motivation to keep going. And two guys in particular, Paul Desmond, who's known one of the founders of the Market Technicians Association, and John Brooks. They both were running the oldest technical analysis firm, Lowry's Reports. And I had a special relationship with those guys for 10 years or so before they passed, to really kind of instill me the right values of why we're doing this. Uh, absolutely uh, is our own motivation, folks. And I see that more than ever now, like the personal motivation to learn the markets and the strategies wasn't there 20 years ago like it was today, where we kind of knew when the internet came along that it would be focused on the internet, but with the markets and the complete transition off the exchanges. I mean, when I started, and one of the first experiences I had was on the floor of the Philadelphia Stock Exchange in 19, what was it, the summer of 87? 80, yeah, summer of 87 was my internship. I
Good
was just
lord,
a
man. You're like
complete,
Jordan Belford, right?
I don't, well, I don't really
Just
I
a few
don't.
months later.
Yeah, I mean that guy. Look, there's a lot of the industry was full of those kind of guys. Okay, and they made their money any way possible, did their little scams, but at the end of the day, what is it all about? I mean, for me, it's about knowledge, and it's about really being able to um, make the decisions, look at the charts, do your own analysis, think for yourself, and come up with the decisions that can create and carve out your life. You've done that. I've done that. A lot of people have done that. But we all know it takes work, dedication, time, a real commitment. And in fact, that's the one thing, and you'd probably agree with this, that has to be there for any trader. It has to be that determination, that commitment, that follow through.
Yeah, I mean, I agree, but I think most importantly, passion is like paramount. You have to have passion because you can be disciplined, you can try to work at something, but passion's like when the times are tough, when you don't feel like you really want to do something, passion comes in and keeps you going, I think, through that. And that really, passion is really important if you want to have persistence, right? And I think persistence is tantamount to any trait you have in anything. It's not just trading; it's just general life stuff. So you gotta have passion, and it makes it easy to be persistent when you do have passion for something. So if you don't have passion in something, you gotta find something that gives you the passion. Therefore, it makes it easy to be persistent, and therefore, that's the key ingredient to massive amounts of success in life. So yeah, man, for sure. I don't really ever talk too much like this on my stream because I'm normally just doing the Bitcoin analysis, but I do love it. I love talking about this stuff. I love, I mean, reading about leadership, and I'm really big into John Maxwell. He's got a lot of good publications and stuff like that. And I'm big into the universe and spirituality and visualization, positive visualization, and manifesting. Like that's big to me. It's worked
Uh,
for me, and it's anecdotal, I guess. But um, if it worked for me, for some random guy from Alabama, it could work for literally anyone. So
Yeah, no, and I know you got that, and I see it. It comes across every night, every time you're there, whether you're doing hardcore analysis or even you're having fun with your crew and your the drinking streams and everything, or I mean, you show all sides, which is really, I mean, that's a real strong suit. You're open, you're transparent, you're a real deal. And I got to say, that was one of my challenges is determining who were the real deals in the industry and who not, because I ran into a lot of shenanigans, let's just say, early on. And I think a lot of people still do, but the internet has done a good job sorting that out. I think, the content, the best content, people find the best content. And that's how I found you, because I've seen other streams, and, I have not come across anything like what you're doing on technical analysis, period. I mean, I focus on the harmonics, but I'm going to say this, Mitch, I think you do the best technical analysis live stream podcast, bar none, bar anyone. So, and that's a big shout out for him and everybody that is new for Mitch or doesn't know about Mitch. Maybe my harmonic crew, go check Mitch out, because there's a lot of things that I do with the patterns that bring in other technicals implicitly that may be there, but I don't maybe not talk
mhm.
about it. And boy, you just kind of deconstruct the charts really well. That's what I think. Really feel like you've got a long, long career of really showing people how to do this stuff. That is brings it all together. So again, I feel like you've got it, and Mitch and I are going to just keep on uh, moving on with our technicals. I really want to bring together more of the people that are some of the older folks that I know that are people that you probably read about, are kind of hanging back, and I'm going to bring them into the mix. I think there's going to be it'll be an interesting year coming up, and I do think it's a good time. This is a really good time for you and I to chat, because Of course, Bitcoin doing what it's doing, and we got to look at what kind of changes. What are the things that are we might anticipate in the year ahead? And we're 2 weeks to the end of the year.
Yeah, for
Christmas is
sure.
10 days away, and we're not where we thought we would be. And so I popped up this chart of Bitcoin, folks, but it's not the Bitcoin; it's Bitcoin futures, and something
Hmm.
I wanted to share with everybody. So I'm working with Harmonic Pattern Collection, um, with for the eSignal platform, and this is the HPC Pro. Normally we look at TradingView, but I wanted to show this one, start with this one, because the futures, and it's one of the problems with the crypto in general, is getting a real consistent feed that reflects the precision, at least for what I do with harmonic patterns. I feel it's remarkably important to be as exact as possible. And one of the ways that we can kind of bridge the data gap is by looking at different markets. We could do this the same way with, say, S&P or NASDAQ by looking at the futures or the QQQ, those ETFs, or the indices. And even though they're all supposed to be similar, sometimes when we break it down, especially from a harmonic pattern perspective, we might see slightly different things that might not show up in one single data feed. So for me, is something I think I mentioned this to my crew last week, and he didn't get a chance to get to it. I think it was last Thursday we did a big workover on Bitcoin. But what we have currently, and I really feel like I should have got out in front of this a little bit further than I did, or a little more quickly than I did, but we did have a daily pattern, a butterfly structure that this is a concept that I want to get into with you, Mitch, too, because I feel like it'll help clarify some of the things that maybe why is it a pattern at that level versus maybe not off the exact high and low. I mean, this is just one of several things that I think for interpretation purposes will help clarify it. But um, over the last 5 years, folks, I've spent most of my time working on these software algorithms. I'm still working on them, the constant refinement. I really feel like we've nailed the identification. I'm working on some automated products as well as type 1 and type 2, the reaction and reversal automatic identifiers. And
Hmm.
that, I think, once I get that nailed down, I have it. I think I've got the rules, but it has to start with this understanding of, okay, why is that a butterfly? I mean, we know it's coming off of 68,000, and maybe we could say it just failed, but from a harmonic pattern perspective, just let me highlight one or two things of the M, the W formations. I'll try to avoid the shark today, and we'll stick to the M's and W's, because that has really been something I feel is emerging in the crypto space. People looking at charts, well, they're starting to follow and recognize the fact that these are M and W formations that actually provide real consistent levels. But part of that has to go a little bit beyond the ratios. And why this is a butterfly, why we're looking at this currently, what happened back in a month ago, was the fact that we had our measurements all to define our zone, okay, at the 127XA, at this what I call an intermediate point. Now I'm going to just remove the bullish pattern. Let's look at the bearish patterns of this.
Yeah, just the butterfly right there.
Yeah. And we have a prior ABCD too that I'll go to. Let's look at the butterfly for a second. And this, for me, if I'm looking at this just on itself, I would say, okay, strong reaction. And we do look at the way that the harmonic pattern framework of the expected way that patterns unfold is we get a reactive move, the type 1 reaction goes down to our minimum target 1, target 2 zone, and then we're looking for a return. But we have to see a few things. I need to see some kind of confirmation. We need to see something that
Mhm.
marks that area. We don't just blindly say that that's a turning point. But let's dial it back now. So we're in reaction phase. And we do have this target too at 44,292 on the futures that is still absolutely relevant for
Oh,
this.
it's ridiculously relevant. You know why, right?
Yeah.
That is pretty much the 88% retrace, the pattern completion zone of that big bullish shark pattern that's been on my stream that I've just been like having up, with the X point being back from September 21st.
Yeah.
So yeah, that's a huge deal. It's kind of funny how it's your second profit taking level of the, for the reaction of the butterfly right there. TA Tetris, I guess. Yeah.
Yeah. And I'll go to, I want to break down the butterfly in a second, but yeah, so that's where we are. Um, Off this C point of that butterfly, and your 886 is 43,143. The shark pattern that Mitch was referring to is kind of shoots off of, might be a little difficult to see, but it kind of shoots off of that down to the 886. Why? Because I think I mentioned this shark to flow model last week. I did, because we have this really tight configuration, that failure up to that last level. And let me just take off the pattern and we can really see the lines for a second here.
And if you're wondering in the chat, like why the 886 has not been achieved on CME futures yet, but it has on spot, well, if you didn't notice, that crash was on a Friday evening when CME futures were closed. So by the time the futures had reopened the next week, Bitcoin had already recovered back up to 47K, 48K. Heck, man, it went as high as 52K before selling off more. So
Yeah, and I think we should have got to 56 now if we're, because of a 5-0 reaction. So maybe we're still dealing with this. I think from just this futures, this kind of smooths out the data a bit and helps us
mhm.
to kind of see what is possible. The extreme impulse wave, that would be this last little ditch up to that failure. Bring that over like that. The minimum of that is a 1618, but we know the 1618 is actually not close to the 886. So we'll look at, say, 2.0, not even close. 2.24 is usually the maximum we want to see on a shark. I mean, sometimes 2618, but whatever this extension, extreme extension is, all right,
Mhm.
again, your 1618 is there, but that's nowhere close to the 886. So that's why we favor the zone lower. 44,875, 43,143 is your shark zone on BTC futures. So that probably explains why we're, you know, just not doing much at a point where we should be at 100,000 already, right?
Kind of interesting though, because you think about like the spot to futures, and it's like, well, when futures hits the pattern completion zone for the first time, it'll be type two return for spot. That's interesting, right?
Yes, I'm going to go there in a second. I'll show up that the show the trading view platform. But I do feel like this explains a lot of what's going on, and then we break it down. Here's my, I'll show the amplified and standard RSI. So, folks, what I use with the patterns, and Mitch uses it. Mitch also does great, man. You do great work with that MACD. I've been investigating that because of what you do with it. I use relative strength principally. I felt like that was the best indicator that showed me the extremes from, pattern
It
extreme.
does. It's better. I mean, it's like, you're looking for that MACD to line up with the RSI when it's oversold for the second time and it's diverging, right? I mean, like you can't, if the MACD looks like really good, but, the RSI is up at like 40 and stuff, it's probably not as strong, right? So that's why it's good having like multiple, you want to have both, because they can complement each other.
Yeah,
When they line up, it's nice.
I like to use, so I've got my harmonic strength index again. That's just years of toiling around to find something that could really reflect an extreme to an extreme move. And for me, I use that HSI, which is what you're looking at now, and that has not
Mhm.
registered in those areas. Amplified RSI, that's usually our quickest, fastest RSI indicator, and with some harmonic calculations involved, that's not even out. So we know we're early. And then if I, this is standard RSI with some of the RSI BAM strategies built into it. And if I bring it back here, even on the daily, this is actually a good way to look at this. Standard RSI BAM has not had an oversold reading since we go back way back to May. Yeah, May 20, May 21.
Yeah.
And we're flirting there. This is, it was the second lowest reading since that low. And you take it back. You have to go all the way back to the COVID low where you are hitting this. You're retesting. And I just wanted the other thing from a relative strength perspective, thought process, okay, is like this. Relative strength likes to express itself in terms of extremes, and the price level might not always directly correlate. You don't always get the same price movements uh, with in terms of extreme readings. You might get a quick pullback where it lets all the air out quickly. That's kind of what this was. When we got down to off of that the 2021 early peak and we came down in terms of price, that let a lot of air out of the tires here, nice fat correction. And then this green line stopping right there. Okay, that's significant because that lines up with the low. That is what we call RSI BAM confirmation. Why? Because
Mhm.
your first reading, all the way back here at the COVID low, well, that was not only a deep reading, but that was a W formation, what we call complex. It comes all the way up to the 50, goes sideways for over a year, but then does the final retest. So your first mark is there, COVID low, critical, important point, secondary point. Well, this is huge right there in that. That's your confirmation for the long term trend. There was a lot, I was extremely concerned. Anything under there, anything under 29,000 for me was it. Then we got a trigger back in, I think it was late July, where then we got a go signal.
Mhm.
But because of this RSI BAM completing, that makes 30,000 your ultimate everything for the entire run. And what this could be, and I'm trying to look for constructive scenarios, is if we can get down on a daily, and remember, it's going to have to happen during the week for these futures.
Mhm.
You have one more test, it holds this 886, you get an inflection, and you start to build from there. That has to be your scenario if we're going to get anything, if this is not going to be the high and not be the uh, the top for the cycle. So we bring it back. Let me overlay, bring the patterns back. But would like to hear what you think about that and what you're looking at in terms of
Uh,
being aware.
yeah, well, I mean, I don't use, the RSI I mean, the RSI BAMM like that. I mean, like, you know, I created that system. I have a system that I use, and then, like, I kind of just stick with it and, like, um so it's like good getting your opinion on things because you have certain things that you look at that maybe I don't look at and vice versa and stuff. And then, I mean, for me, it's pretty simple, like I want to see Bitcoin see 43K again, 42 to 43K again. I want to see some rounding action. I want to see some divergence develop. It looks like on the futures chart, if we see 43K, 42K for the first time, we'll be developing some RSI bullish divergence, at least on the 4 hour. Um, so just looking at it, and yeah, I mean, like the way the oscillators are set right now looks terrible. It looks like, yep, you're about to go down, like the CME futures from where it is right now, at least 10 minutes ago, 46,930. it looks to me like based on what the 4 hour oscillators look like, it's about to go down another 7% to go test the pattern completion zone of that bullish chart for the first time ever, right? And it'll be the lowest prices we've seen on CME futures since September 30th. So, I mean, like, um, things kind of look like they're set up for that. There's lots of distribution going on locally. December 7th and the 8th, and then the 13th is just lower highs, and we've seen that before. You can go back to I don't know, multiple times this earlier this year where you would just you'd show lower highs like that. It would just look really really weak and looked like it was about to roll over, and that's kind of, I mean, look, you get, it's all about the levels, you know that. It always has been, and this is just reiteration of my stream analysis and all that. It's just if you can get above certain levels and then back test them and hold them in support, then you're good. But that, unfortunately, currently at this time, we are below those levels. In fact, we have only merely today just rallied to back test those levels that were once support resistance as resistance again. And you just kind of confirmed that by testing, failing, and bearishly engulfing on this previous 4 hour candle and spot price. So um, to me, it's like, you know, anything's possible. Um, we don't need to know where something's going to make money, but we certainly want to see certain things develop on a chart exactly the way they've developed on charts for 100 years. And normally looking for the harmonic, the pattern completion zone, and the second test, like you always teach. And we just don't, we don't have that yet. Like Bitcoin spot price had one test on the crazy crash and the rally, but now, you know, you're just chopping, churning around, you know, and slowly bleeding out. And I think it would probably be the best resolution to see 43, 42K for that type 2 return. And at that point, that's where you really want to start seeing bids come in, because like that's like you're starting to get to last stand territory where if you fall below $40,000, the entire trend is in jeopardy. The trend that's, you know, restarted back in July, June and July, from the bottom, because, you know, if you're falling below 40K, you are essentially breaking the previous discernible daily swing low, and that is trend analysis 101. Is like, how does a trend reverse? Well, it breaks extremely important previous levels within that uptrend, and that's one of them. So um, and just being below the level above that 48K 47.5, well, and you're testing as resistance, so it just leads you to believe that it's very very good possibility we see 42 43K one more time. That's kind of me though. So what do you think?
Yeah, I think that's, again, this is where, multiple methods saying the same thing have great confirming possibilities, and do stick out when you can come at charts with different methods, and they tend to agree, which they do. Yeah, you have to abide by it. And I think, everyone was expecting this thing to already be much higher than it was, but it puts us really, like you said, at a true make or break. And the
Yeah,
the,
we're getting there for
the
sure.
static, if this is I've been saying all along that we would do a crab pattern, go up to a 1618 at 89,000 as the top, but we
Also
didn't.
the
We
major ABCD, you know, from the COVID crash being A, you know, just like all
on
that's not really happening.
Yeah, on the weekly too. I mean, that's the
Yep.
this was from a real standard harmonic level like this of, and it is actually something quite valid where this is something in the .com era that we had a lot of just all-time ABCDs, and that's what you have up here at a 1618. But we're losing the integrity, and if I just take off the ratios, and a lot of times it's just draw a simple trend line, and you tell me, much below that and much below this C point, if that is your C point at 40 right there, then we need to be probably making different assessments beyond that, because it does violate integrity. It's the pattern integrity and that whole thing. It's something where I'm a little concerned. We see it on the futures, or sorry, yeah, on this continuous chart of gap breakdown. All right, of at a critical trend line, and then
Yeah.
follow through zero Nothing constructive here. Even from that shark, we can connect those dots, but not really what you want to see. And this should have done some kind of shakeout, in my opinion. I don't think this stuff really is going to respond if you just keep slogging down lower. And then if we do look at that butterfly again, bringing back into the pattern
Mm-hmm.
on the daily, you have a lot of evidence for something much larger. And I'll say 44,292 because you do have those other numbers there. Uh, that's I think we'll see that before Friday, and hopefully you do get on the spot price a flush. But if not, and this is something for me that is the type 1 reaction, type 2 reversal. A lot of that stuff I brought out 4 or 5 years ago in my volume 3 book is related to patterns, is something that can't be ignored. And the only thing under that 43, or we flush this, is, let me clean it up, but let's just isolate the prior crab pattern, because we do have two relevant patterns that Bitcoin is showing us. And I think, Mitch, you say this almost every stream that I watch, where no Bitcoin, no crypto. If you don't get
Yeah,
that
dude.
you don't get that moving, then
Yeah, no longs can really play out. It would be an anomaly, and it's like you don't want to play anomalies when the macros shifted bearish. Like no trade, like real swing trades that based on the 4 hour daily are going to play out at all. It's just like and that's the way it's been with the market for over a month now. It's just there's just not long opportunities. I mean, like, yeah, you can try to say, oh, but my scam coin that has like 20 people trading it, it pumped, dude. You don't know what you're talking. It's like that's not it, man. Look at the macro. Go to your normal watch list of all the market cap coins that are high. They're not doing anything, but they're just selling off. Their momentum shifted. They're making lower highs, lower lows. A ton of them have gone back to their same levels since July, so zero accumulation for market participants. Um, yeah, that's normally not what you want to see. If you want to, I was thinking that it was kind of trying to set up like a blank canvas to where they would all make their major resets. They'd go up to 88% from that high they made earlier this year. They didn't. They're staying flat, sideways. No one's accumulating anymore on so many coins, and that's kind of good, I guess. But it's flushing out the entire market and it's resetting like everything hardcore. But yeah, I mean, just you think that you want to see accumulation before a big markup. And the thing is, like, not all altcoins are created equal because there were a decent amount that actually, when they bottomed out in July, they did play out. Those M shapes did go, like they did hit the top of the harmonics, which were their all-time highs, most of them, like Sol and Luna and AVAX and I think maybe ACH. There were some that really played out extremely well, hit all time highs, and then a lot of them, tons of them that all set up the same way didn't do crap. They made 23% retraces from their high to low. That's really bad. And then again, some of them all time highs, 100%. Heck, some of them hit 1.618s. Like from their high to low. So it's just like yeah, some are gonna fail, and this is like so like testament to the way it always goes. It's like I talked about on my streams sometimes, not that much, where it's like you have like a ticking time bomb, and it's Bitcoin, and it's like okay, these altcoins, they're gonna set up, they're gonna have the trade setups, they're gonna have these confirmation lows, these divergencies at critical levels. All right, awesome. It's time to take your chance, right? Place your bets, make your trades, and some will underperform vastly. They'll fail to launch, and then some will do adequately, and then some will outperform and do incredible and exceed uh, targets, right? And it's tough, like gauging which ones are going to actually do that, compared to the ones that won't, right? Graph still sitting there. Everyone's a skeleton, like sitting in the lawn chair waiting on GRT to make a 38% retrace.
Yeah.
So yeah.
And they do this is something I've talked about. A couple of the things that I've whiffed on recently. Some of them I caught, those S coins. Some of those S coins I caught, but others I wrote them and then I didn't respond because they didn't spend much time up there and came right back down. And that technically, hey, they satisfied the harmonic requirements. Were they fillable at those areas? Really tough to say. And again, I think it's with the way that the patterns work out and the way that technical levels work out. It is not. You stack the evidence to make a case, and you have to assess that case arbitrarily and look at that and say, okay, here's the evidence. Forget what everyone's saying. Forget the hopium. Forget 10 years from now. I want to know now. I want to know what's the next 90 days because am I going to sit through a 30-40% drawdown continue
Yeah.
here on Bitcoin where the obvious evidence for me looking at Bitcoin futures on the daily, I got to say to myself, as Mitch outlined and some of the things that we're discussing of the critical importance of 42, of this 886, for all the
Mhm.
reasons, various technical reasons we cited, harmonic and otherwise, that is your make or break. And I'll bring one other aspect into this of with harmonic patterns and the type 1 and type 2, the way that these unfold is we have to get to our target one, which you did up there. Okay, no problem. But the thing that I've seen, and this is just hey, I'm still learning. I'm still learning about harmonic patterns, folks. I really am, and I can't really emphasize this enough that there's still tons to learn about how harmonic pattern dynamics and uh, technicals in general. I mean, there's lots of relationships out there that are valid to be discovered yet. And the type 1 and type 2, the way that I've been able to refine that over the last several years tells me that, okay, I've got clear make or breaks. And if it's not 42, then this deep crab pattern that we're assessing here will likely get completely retested. It is I feel like a mechanical process of the markets that Bitcoin could still be in a long-term bull market, retrace, nice chunk of this year's gains and still be up 100 something percent or more. But if I was looking at this on a 5-minute chart, 1-minute chart, daily, weekly, I would have to venture much below that 42, 43. We come all the way back down for a full retest at 30, which is then you're looking at the full 886, but I would even
Gap
venture
fill at 32
30
too.
30, yeah, 31 600 is that 1618 of this crab pattern back here. Yeah, let me bring this up here. So this crab pattern, change that and bring it to a different color. All right, that's the beast. That is the creature. Why do we why animals? Because these structures to me are creatures in the market. They're mechanical market mechanisms that this collection of data is actually truly representative of buyers and sellers in this area. And it led to a nice sizable rally, but it also tells you the population of people and traders in here that are holding this, and that had enormous responsive reaction. There was this last ditch, okay, of the April high, and then you got a 1618 sell off right into the Bitcoin conference. I thought that was kind of typical, but that 1618 and this whole consolidative structure is really stands for something. And I would, really have to say that the whole bull market rests on this hop level at 22,540, and you could still go down all the way there and still be in a bull market where you find support here. But I'm not going to be sitting on
Yeah,
that.
barely. Yeah, and the thing that sucks about that is just like, I mean, September 30th, you had like Morgan Stanley that bought like $400 million worth of GBDC. Well, we're nearing that price again. You'd think that they haven't sold their position. You got to think about like sovereign, what nation states buying this asset. Think about the mass adoption going on. This is like why you really do not want to see those levels. I mean, just because it's like the accumulation of the world, right, is going on with Bitcoin. So it seems, and still is intact until we break 40K, in my opinion. And yeah, I think it's a long way down if you break 40K for real. And so that's why we don't want to break 40K because you think, I mean, we like romanticizing Bitcoin, of course, right? And we just make a higher low, no big deal, no harm, no foul. Type 2 return at the 886 at 43, 42K. And then we continue on and we keep making higher lows because there's continuous accumulation and world adoption and all the non zeros like Bitcoin, Ethereum, non-zero wallets every day, just about all-time highs, right? So network effect, Metcalfe's law. It's like, I would prefer, we see a higher low than we did in September, and we never fall below 40K. I mean, and here's the thing. It's, it kind of reminds me of like, think about September is the same as January, where you had a run up and then you sold off and then you created for the first time in history, you manufactured 30 to 31K as support. And then you had your big rally, and then you finally, Wyckoff distribution, you dumped, and you finally came back to those levels to test and test and test and test. Fear at max levels. It took Jack Dorsey and Kathy Wood and Elon Musk having a powwow on like, July 20th, 21st to be the catalyst that made us rally and saved us from falling below 30K. So, I mean, I would prefer that like what happened January and June, July is now September and what will be December and maybe January, or we come down to this level. We maybe make a 100% retrace. I would hopefully not, just 886. But you flirt with the 40 to 42K area, similarly as you did 30K in January, May, June, and then July, right? You would do the same thing, hopefully. But and that to me again would really showed that, yep, there is certainly more and more people that keep owning this asset than before. It's not like an S coin. It's not like showing, oh, the same amount of market participants own this asset that they did in July. That's not as good, right? I mean, really, so just
Yeah,
thinking out loud here.
no, it's exactly what we need to get out, and we need to kind of work through this because um, the assessment of levels, the assessment of where is the opportunity, has to be the kind of the pencil sharpener of the whole strategy of, all right, Bitcoin's going to be around, it's a massive adoption and all the fundamental stories that you hear everywhere else, that you could go to like 10 of those massive crypto influencers and you're going to see the same top 3 top 5 stories. But let's get down to levels. And and that's you and I really why we're hammering it out today, because I think you and I both and everyone probably wants to know, what's the number? What's the number where you really get concerned? And I think both Mitch and I are pretty firm at 42 being, you don't want that under 42, you don't want it under 40. And I
Hmm.
and I, for everything that I'm seeing here, I wanted to kind of go back and show that we've had this before. And we had another crab pattern. I want to go back really quick and show how this came together. Go back to 2020. All right, and we did have just a slightly different situation because we did not come off of a failed breakout, if you will. This was more consolidation, but COVID low did have that crab pattern on the daily where we had type 1. It was not as long in duration, but then, type 2 came here and that was it. That was the low where once you came for that retest, came up, you form your
Like the
pattern.
Black Swan event, right?
Yep. and it hits target too, but can't get through, starts to roll over, when do we get one of these candles? Because I think, and a couple more, if we can't hold, folks, we're going to see a big candle like that. That would be the candle under 42. That would then get you down to your hop level. And that hop level, hey, that could be eventually the Bitcoin low if we do that full type 2 off of the current crab, as this one did back in 2020 at the COVID low, and that was it. What was that low? 38. There was a couple things there right at
38.50.
yeah. And Bitcoin futures was 42. But again, you see how slightly different markets, but patterns emerging at those same areas give us things that we need to pay attention to. And that's, for me, we come back, if this is a type 2, if we're back here in a massive type 2 on this daily, all right, we're not going to hold. We're you really need to see serious things develop in the next week. I would love to see that flash retest to 43 off of the bearish pattern. I'll bring that right back up again. So now let's look at it back to back patterns. Yeah, I mean, I'm really feeling like you want to end this reaction, and it would be a nice sharp reaction, but that's your line in the sand, and otherwise, I would step aside of uh, looking for probably a washout, but I'm not there yet because even by my rules and the way that I see these develop, I would love to see uh, a type 2 in this butterfly. Like if I was really bearish and I wasn't a believer in crypto, and I thought, okay, I was like one of those guys, one of those old boomer uh, grifter, like who's the one? Not Ray Dalio. Who's the other guy? Shit.
Schiff?
Yeah. A guy like him. And just, just wanting to stay in the 20th century. Um, if I was still wanting to be bearish, I would want to see the full retest of that butterfly and
Mm-hmm.
even the hop level. And that's why I'll still assess this as a reaction. One thing I do like, the fact that we're starting to slow down. We're not, despite that bearish engulfing yesterday, we
Yeah,
absolutely,
right.
yeah, really. But
Below critical support. Yeah.
you would think this thing would really fall through and would fall through the floor now. So let's see what goes on here next 2 or 3 days, because this is if we get a flash retest 42, 43, and then you go, all right, I'll feel a lot better. But if you get an absolute breakdown and you're kind of there where you have to prepare for it, it's like if they break the dam and the dam cracks, you're not going to want to watch the whole thing explode, because that would then shoot this gap where, from how I would look at it is, you would then come down like an automatic magnet move, that I like to say, and do the full retest off, back test that pattern. And that's a lot lower than anyone wants to see. And I know a lot of people are saying that if it's going to go bear, they're going to think of a full reset, full, everyone. It's interesting how people have evolved two ratio assessments. See a lot of people talking about 1.618 or 0.618, the phi golden ratios. Uh,
Mm-hmm.
People also fairly confident that, based on, I guess, prior stock to flow, that these do 80% corrections, and they'll come all the way back and then retest. The futures from the 19 to 20, that was almost a perfect 886. Didn't That was more, depending on your feed. This full reset, you got to the
Yeah.
yeah, 886 on the money. 886 of that 43.92. So the 88.6% retracement, like the 618, 1618, is probably one of those singular ratios you want to have on your charts. That's a ratio that I released actually with the bat pattern back in my volume 1, and we see it in crypto. Just extremely reliable metric. And that's, if we're looking for high to low cycle measurement reset moves, if that's what you're thinking, or if that's what a lot of people are assuming. I've heard people, the same people that were calling for Bitcoin 150, 200,000, I won't name names, are now saying, well, if it breaks under, then we go back to Bitcoin to 11 or 12,000, which is, maybe that, but that's only in a full reset cycle. I think you'd have to have some other fundamental things like another COVID, God forbid, or some kind of major geopolitical thing that would stimulate that type of a crash.
Raising interest rates 3 times next year.
Yeah, well, if they raise it one, they'll probably raise it five. And again, I think
Yeah,
if it gets out of control, we saw the only way that they
they'll hold
recovered
it
from.
hostage.
Yeah, well, the only way they recovered, and I mentioned this to you. I think you mentioned, I saw caught you towards the end last night. You said, referenced my comment about 74. That, look, what happened in the early 70s when they took the U.S. off the gold standard, that set the whole thing in motion. Okay, of the inflation that we saw. I mean, I was a young kid in the 70s. I remember the odd even days as a young kid. You didn't have enough gasoline. It was so ridiculous that, if you had an odd number, last digit on your license plate was an odd number, you went one day. If it was even, it was the next day. And that was like, 75, 76, 78, incredibly, and with all the energy and oil that this country has, it was absolutely insane that we're even back at this situation. 2 years ago, we were the leading energy exporter in the world. We could easily go back and alleviate this situation, but structurally, what's going on, the people in power want it this way. So I feel like if they're going to structurally set up the conditions to try to trash this and destroy this, it'll be a temporary but harsh move. That's how you might get your 886. But we'll know really soon. I mean, we'll know, and Mitch, you'll probably see it in the other things that you do. I'll see it in the patterns of another, some of my proprietary stuff at 42. And I wouldn't,
Oh yeah.
maybe we get down to 30 or 22 or whatever, but I would not want to sit around and even wait and see how it plays out at that point.
Hmm.
And that would really be uh my takeaway for, thoughts into next year, thoughts for crypto. But Bitcoin especially, I mean, we're really just stuck on this Bitcoin chart because I do think it's the leader. It's what got us to where we are. It's it's where the billionaires are staking their lives. Um, you know,
100%. Yeah.
Jack Dorsey. I was there, front row at that Dorsey conference. Love or hate the guy, he is whatever. He's all in on Bitcoin, and so is Michael Saylor and these other guys. So, how many billionaires does it take to keep up $1 trillion market?
Yeah. Well, I mean, speaking of trillions, like since that fateful day, November 10th, when the crypto market hit $3 trillion for the first time ever, and really that was it. There was never another day even we were above that, at least in the chart. Uh, you know, in 34 days, all of crypto, about $1 trillion has been washed away. So where is that trillion now? Where did it go? I mean, like people took profit, got it. But like, where is it going? What are they doing? They're just gonna sit cash in the DXY. What are they doing? Until like, what's got to change? Are they just waiting for the edge on Bitcoin at the Type 2 return of 42K before they start buying back in? Or they just, oh, they're happy.
They have to go somewhere with the money. I agree, and I think everyone has to absolutely move it somewhere. There's people don't. I really sense, in a way that has never existed before in the business community, a real, I would say, a disdain for the policy currently being unhatched. And you see these people that have had money, unlike individuals who've had money unlike ever before, who are able to create their own systems. I think they're willing to take the chance. I think they're willing to lose money, go all in on a Bitcoin or whatever, because just simply going with the status quo, excuse me, status quo of this fiscal insanity of the last 10 years. And it's multiple administrations, folks. It really started with Bush W way back when because of the wars that he wanted to pursue. But then Obama blew it out of the water with Yellen, and and they could have shut this down in 2012, 2013, and we could have got back to a normal thing. But no, it's now beyond. I mean, everybody knows it's beyond control. So you have to keep the game going, or it will implode on itself. And that's why I'm still, as long as they're going to keep that, despite what they talk about, all right, you got trillions of dollars in circulation, still not even fully in the markets yet, that will get caught up. I just feel like it's going to have to be at the right price, at the right setup, regardless of all of it. This is where, again, reading charts, reading levels, and separating that from narrative is crucial because it is certainly a difficult time.
Oh yeah, it definitely is. I mean, inflationary environment, like really, really high inflationary environment, and everything's just like, a lot of stocks have just run up so much, crypto's run up so much, and it's like people want to take profit, but it's like you take profit, it's like what are you gonna do with it? Are you just gonna take that profit, that trillion, half of it, put it in real estate? Or I mean, you just re-enter the market. I mean, it's be interesting to see like where that trillion just went and where it's going. And it's like, where's it going to get reallocated? Because it's just like finite amount of money, and it cycles between different markets, different sectors. You know, energy's looking okay, I guess. Like ExxonMobil, we're looking at that bullish 50.
Yeah,
Which everything's going into Apple again. Just more money goes into Apple.
we could take a
Ridiculous.
look quick. Let's take a quick look at a couple of those. I mean, let's take a quick
Yeah.
look at it, like Apple, and get into this larger discussion, though, folks, of if we're going to have issues, you're going to see the market drop further. You're going to see things start to reverse. Here's Apple, with that just been on a straight up run. Go to the daily there. I've got a massive crab pattern on the daily
I'm
here.
not seeing it on screen shared. You see that?
Oh, let me
I'm
check.
looking at. Yeah, it shows Bitcoin still. So just want to make sure.
Let me see.
There we go. We good now.
Oh, yeah, maybe it takes a second. I did want to show you this. I meant to mention this. I have a massive crab pattern at the hop level, hop being harmonic optimal price, where, look, it could still go up, but I'm not entering a new long position above a 1618 daily extension.
You remember what happened? What was identified yesterday on Apple? I mean, it's confluent with your analysis right there of the harmonic
Yeah,
for sure. But
the bullish, the bearish engulfing reversal there.
the dark cloud cover, yeah,
Yeah,
it will be confirmed today, and it was we broken out of that channel, and it's like, yeah, bull crap, dude. You're just up thrusting through it, and the dark cloud cover really was just telltale that some sort of pullback was coming. I mean, maybe not. Like, of course, like you need like the next day to follow through to and then make a lower low than the previous candle's close, and that confirms it. So you're getting that confirmation today with 3 hours 41 minutes till that the session closes completely. So,
it, check it
there's
out.
a lot of downside, right? A lot of downside with your harmonic and with that pattern. Just was right. I mean, crazy.
Even if we're going to do a pause, folks, I think, Apple comes back into that 1618 prior to level at 165, 163. But if we're in a type 1 reaction, which we very well could be already,
Hmm.
Target 1's 146. That wouldn't take long. But this is also where simple recognition. Everyone's looking for a year-end rally. Well, we already did it, and a lot of
Yeah.
these last markets, you've got the top 5, 7 Nasdaq holding up. A majority of the market. I saw something. Oh, I wish I could find it. Maybe I'll post it later. I'll find it and post it. A great breakdown I saw of someone just showing how the FANG stocks, the top 5 or 7, are holding up like 40% of the S&P and 50% of the QQQs. And if they go into a correction, the whole thing will accelerate lower. So that's
Yeah, so, like,
good.
right now, saw a graphic and it's like, so right now in 2021, the 5 largest stocks in the S&P 500 comprise 24.53% of it, okay? And, the last time we were at these levels, 1970, where we were 24.4% of when the 5 largest stocks. So it's like, there you go, the shades of the 70s, like you were talking about. And before that, though, it gets even wilder. I mean, like, you can go to 19, and the 5 largest stocks in the S&P 500 comprise 27.6%. I think that's the record. So we still haven't hit like 1964 levels, but we're working on it. We're getting there.
Yeah, we're getting there for sure. I mean, this is Microsoft doing a crazy run, and Microsoft got busted in 2000 peak, did an amazing run,
Yeah.
very similar. I mean, there's just a lot of similarities on an exponential level of what this has done. And but when you get to this point, really, these long-term charts, folks, you just look at your monthly. Mitch does a
Ooh.
lot of he does a lot of candlestick analysis. He teaches the candlestick patterns, and I think that's if you're not familiar with candlesticks or candlestick patterns, do check it out. And stuff.
That was the single aspect that got me into all this. Like, when I got out of college, I learned about investing and stuff, and like the thing, like, I was like, "What's a Japanese candlestick pattern?" And I started reading about it, and I'm like, "I gotta memorize it. I want to learn every single one of these." And that was it. That was the start of all of this. Like, it's now manifested into a lot more. But, like, you're gonna find stuff on your journey that hits you hard, and that's gonna fuel fire to keep learning and keep growing as an analyst and trader. So, yeah. Anyway, sorry, I didn't mean to
No,
go on a
I
tangent
agree
here.
with that. Steve Nissen, somebody I know I've met before. He translated the work, the Japanese transcripts. He's recognized as he really is the translator of the work, not so much the inventor of
Hmm.
candlesticks,
He
but
brought them to the West, right? Made them
he,
digestible.
yeah, he was. I think one of his parents was Japanese. I think he is of Japanese descent. And he's done a lot of great work. And then my other friend, Greg Morris, formerly John Murphy's partner, guy who's a friend of mine. Greg did Candlesticks Explained, and Greg actually developed the first candlestick software. And you should check him out because Microsoft right here. Here's a Hangman Doji, almost ready. We get a close underneath there. That Doji,
Shoot, man,
what would you say that?
that's like a gravestone doji
Yeah,
on. Oh, I'm sorry, I'm looking at Microsoft right now on your
yeah,
chart.
yeah,
Let me go to it. Microsoft. That's like an evening star
yeah.
right there. Evening star reversal. But here's the thing, right? And Jeff Grau or Probes brought it up. It's funny. We had identified a couple months ago, September, the bearish engulfing candle. It's like, anytime a bearish engulfing candle happens, the Dow Jones, it never plays out really. It like normally just doesn't matter and doesn't turn into much of anything. Like, we didn't get when Microsoft crashed in the monthly, it was a bearish harami back in the month of January 2000. So
Yeah.
seldom are you getting these bearish engulfing candles that are actually playing out. And it did happen. There was a bearish engulfing January into, you know, Microsoft crashing to $16. Yep, $16, dude.
Yeah, I remember
Um,
that. I remember
but like,
looking.
yeah, I mean, so the bearish engulfing candle, what happened? Bullish engulfing candle, almost bullish Mara Bazoo. And now, yeah, last month, the month of November, you did get what could be uh, perceived as an evening star, or maybe even almost a shooting star. Yeah. I don't know why yours looks like almost a gravestone doji
Yeah,
on
that's
yours.
from, I'm
Yeah, it's
showing
just
2000
super
right
shadow.
now. I'm showing the monthly dynamics here of the 2000 chart. I think it's something, we want to consider for all markets. We have I think across the board. This is something when you get to no man's land, which is where we are. And I say no man's land because no one really knows how far this is going. And it's almost like when we were
It's
back
just
there.
so extended. It just keeps going, and it's just not lulling and stopping. Ever
Yeah,
since COVID crash, just nonstop. It's like, okay, made really good money. Now starting to get a little maybe toppy on some things. Maybe not like, Apple, like whatever, because it just keeps going insane. But yeah, a lot of things have topped out and have sold off and have now made confirmed lower highs. Yeah, and so it's like, God, man, it's really tough because you're like, oh, well, maybe value looks good. I mean, we saw Coca-Cola, like, holy crap, dude, get that double bottom and is blasted off and hit highest level since COVID crash. And Cisco SYY looks like it's showing a major potential double bottom. I mean, I guess they're out there scanning, but collectively, most little iffy, like little not, they're not set up for great fresh longs right now because it's just the value names have been underperforming like trash, and then the growth names have played out, extended on way too long, and you're paying high premium, and they look kind of maybe toppy, right?
check out Coca
Maybe
Cola.
due for a pullback.
Here's Coca Cola in a monthly. Now, the run
Wait,
and
make sure it's visible on the.
oh yeah, it'll take a second to load.
Oh, okay, okay.
One thought there, and again, something just coming off the top of my head is there was a huge rush to value stocks. Huge rush right before the '08 crash and the 2000 crash, although that was mostly tech. The
Right
rush to
after Biden got pretty much when everyone knew that Biden was going to be president, that's when the switch flipped again to straight to value. But then it started underperforming again. Now it's massively or rather underperforming the Nasdaq again and the S&P.
yeah, we're coming up there. I mean, Coca Cola is a great bellwether. I would uh, be focusing on. I think it's we do have pattern dynamics that on the monthly even. It's showing me this big ABCD leading up to it at 58, right
Oh,
where we
true.
are. And incredibly, look at what we did on the COVID crash on the monthly is we came all the way down in a reactive move, right through target 1 and right off of target 2. Okay, that's definition reaction. Right down to target 1, 2 area. That's your reaction. Now we come up, we reverse off of here. If Coke can't get above 60, then I'm looking for reversal. And
So
you're
I'm confused on like the ABCD, like why it's recognizing the swing low from July 2010 and not the nadir from March of 2009, right? If you look back a little
yeah,
bit
we
left.
were gonna say I was gonna get into that about the butterfly on BTC. Um,
Yeah, that was interesting too.
there are I think there's things in the what I like to call true harmonic levels. Things that we have built in to the finder, to the pattern screener, to not only find the appropriate metrics but time measurements. I know we did this with the ABCD where why wouldn't it grab, and it's a great question Mitch is asking, is all right, the software is grabbing, drawing an ABCD here, but really the all-time low was there. From how do we know? Okay, how do you know that it is an ABCD from where the software is showing it, or is it an ABCD off the all-time low? And a couple of the things that I can share simply are that this C point's not at a 382 off the prior low. So that would not be an ABCD. That's one reason why the computer would spit it out. Also, the time symmetry here,
Too shallow on C.
yeah, better suits that. Now, I look at those as more complementary. I would love to see that all-time pattern. I would have loved to have seen it off of actually the '04 low, like there, and then you come up to your B point and then do another CD. That would be that's the old way I would have done it, and I would have been looking at 63, 64. But again, this is some of the stuff that I've truly learned in the last, I would say, 10 years. We have had
Mm-hmm.
I came out with harmonic analyzer software which was the first harmonic pattern program back in 2000. But with harmonic pattern collection, we were able to really refine it and do some more. And I would look at that as just as a harmonic level of I need to see other things to confirm what that shows us. But clearly this thing's reacting off the levels, off that ABCD, and it helps to know that we got rejected off the ABCD, and then we responded back off target too. So this secondary retest is an official type 2. I'll look at Coke up at the hop, 59.50 or 60, and we'll see if that rolls over. And the likes of, Coca-Cola. Another one I'm looking at is Altria. That's another defensive stock. You mentioned Lockheed Martin. I think Disney. A lot of those type of names. If they start coming off of these patterns, and the rest of the market, we got Nasdaq down over almost 315 now. If you see that kind of thing materialize, yeah, then you would be a little bit more concerned. But right now it's probably located. You got what, Dow down 135 or something, 140. So it's not. This is more, I think, focused on tech and those high flyers as we get into the end of the year. But yeah, if these don't materialize, if Coca-Cola, this is here's your daily on Coke. I bring that into the view. All right, that looks a lot better. I will feel
Yeah.
better if Coca-Cola breaks out through 60, 62, but it's why we want to be looking at multiple time frames. Look at, the larger picture relative to, not just an all whole indice, but maybe look at individual components and break it down. Maybe this is a tech correction, temporary profit taking into the end of the year. Who wants to pay 40%, 45% next year when you can pay 25%?
Yeah, dude, for sure. Yeah, I mean that makes sense. And Dow Jones so far, I mean, it did just make a higher low than its previous low. Uh,
Really quick,
but
let me.
so far it has not recaptured higher highs. It's just now made a lower high.
Yeah,
And yeah, now we're gonna see. Maybe it comes down for a secondary test like it did in September. It made like 2, 3 tests. So yeah, I mean,
we'll have to see.
just
The crude
yeah,
oil situation was the other one you mentioned. Again, I just wanted to kind of highlight this range of zone that pretty much 80 on the top end is going to be your static resistance for a while, and then 64.50. Um, I think crude oil, like a lot of these, if the market's going to fall apart, crude's going to go down, and
for
that's
sure.
if crude can hold up here, okay. The rest of the market may be more rotation than any kind of individual or total correction. So a lot of these kind of things want to look at probably on longer term time scales. But if we see this stuff start to crack, especially early into next year, that's where you get the concern.
Yeah, I'm just looking at the US oil chart right now. Yeah, I mean, its long-term uptrend is still going on, right? But starting to test your luck. I don't know. You bounced really well off that. There's a demand line that goes from March of this year, first anchor point, August of this year, and now recently December of this year. Um, if you really want to see this thing fly again, you probably want to wait for a confirmation low, like a double bottom or close to like a higher low double bottom or something. Going back down to like $66. Right,
Yeah,
then by then you could have bullish convergence, divergence on the oscillators and the daily,
yeah,
and confirmation. Right, I don't know. So and there's a lot of support. There's some really nice support at like 67, or decent support anyway at 67.
yeah. 65, I think, is a really solid number. And again, I think anything under 60 on crude oil would be a challenge. You'd have to say, hey, something else is going on here. I've just popped up XLE, and XLE, it's got a nice shark pattern here on the daily. Looks like we're rolling over. Maybe you do a target one back to 50, 60, and that's about 10% pullback on crude oil. So a lot of pattern structures and a lot of things where I would want to watch what these do at these levels. Um, I think the backdrop of the money printer and with very few options, where are you going to go with your money? Is I
I
think
really
challenging for most people. And maybe this is probably one of those times in the market where we need to be patient. Let the
it
market
is,
come to
yeah.
us.
I
We
agree. Yeah, it's time to make money and time not to lose money. And when stuff's making lower highs, lower lows, for over a month, 6 weeks, it might be time to just wait for an edge, wait for a reversal. It's never about finding the bottom. Never. It's about finding, unless maybe the COVID crash, you had time to do that. But like, it's about finding the second, third, maybe fourth bottoms. That's when like you have confirmation the trend has reversed, it's back intact. There's accumulation again, there's higher highs. Um, the first bottom, even with the harmonics at the reactions, like you just don't know because it goes for a type two return, and if the market's too bearish, right, it'll just blow past the type two and just fall to new levels and probably create a new harmonic and make it turns into a freaking crab pattern or something. So um,
exactly.
yeah,
No, no, that's a
and
great point because once you're able to recognize that, and I know you're there with the patterns, but you realize that once it almost becomes obvious, like, oh, hey, that has to happen. Well, do I want to sit through that drawdown and go all the way down through that all, or do I want to be defensive and then get patient, look for that opportunity? I think uh, that's kind of where we are, where a lot of people were on the edge of their seat and at ready to jump on this market in November when the market wasn't ready to be traded.
yeah. Well, November, I mean, Ethereum was at all-time highs. You're talking about the stock still, equities?
Both. I'm talking stocks, and I'm talking a lot of these moves that did their moves. Bitcoin. I think it's like the poster child for the whole market because everyone's been
Mhm.
uber super bullish, but then we've run into a bunch of speed bumps here, especially with Bitcoin, with everyone clinging to stock to flow, and then that being a complete bust, as although that had proven itself throughout this whole cycle. In the face of it, we have to start to uh, come back around and say, look, that was great, but it's not working anymore. And your expression, the way you describe things of being at a point of deep value, is probably where we need to uh, look for opportunities always. But with Bitcoin and other cryptos, where are the deep value opportunities? Are we there? I don't think so.
OMG, because of the airdrop. OMG literally like it full reset, dude. I'm gonna PM you the link. You'll probably think it's really nice looking. It's like chart art almost here. Like
Yeah,
just check your Discord real quick. I'm
I
sending
I
it to you
talked that.
now.
Yeah, I brought that up yesterday. I had to switch that
Beauty.
over.
It's gorgeous, but it's still at like reaction levels, and the RSI on the daily isn't really that good yet, and it barely engulfed yesterday. There's no way this thing stays. I mean, it could 488 is the 886 roughly.
Let me see if I can get that on the
Yeah, I mean,
proper.
full reset. That's one, and it required. And it's cool though because OMG, it had a bear shark pattern. It even got a type two.
Yeah,
Um, Let me post that too. This is how it like ended. Kind of funny. But like that's the way I kind of feel about Bitcoin right now, where it just painted this little bearish cipher pattern and has broken support and just needs to go like 43, 42K for a type 2 return.
let me see if I can pull that up and pull up the other software here.
Yeah. Yeah, I think there's one stock. There's like multiple models or whatever. Of course, right? Of course. But you know, the normal one is still fine and no big deal yet.
Ooh, I think I got this. Hold on. There you go. Nope, not the right one. Hold on.
And thanks for everyone tuning in. We got 330 people here. If you're enjoying the this podcast, hit that like button, that bell, that sub. Let's get some hype in the chat. Don't be a scrub. All right.
Appreciate that. Let me see if I can find this. Let me go back.
But yeah, I mean, like all these other coins, though, nothing. They're not like OMG. I mean, not really. I don't know. I mean, like, it just depends. You pick an S coin. I mean, like WRX complete reset, XLM. You're getting there. I mean, you're right around the same levels you were at in September, same levels you were at in late July, same price you were at in January. I mean, so it's just like, unless you're trading this market, you can't make money in crypto this year. Like unless you're actually taking strategic entries, stop losses, and then take profits at tops. There's no way to make money in this market just holding. Like you didn't, unless you got really, really lucky.
Yeah, I think I got that up now. This is Harmonic Pattern Collection for TradingView, folks. Everyone can get a free trial to this through at harmonictrader.com. Just sign up as a basic member and then follow the instructions, and we give free trials out to all of this. So this is one or two of the things Mitch was talking about. Oh, here's that OMG garbage. And this is, I think, let's get this into the picture, but
Garbage, but it's one of the only ones, man, that's like maybe at areas, but
it looked like the next Solana. It looked like, Polkadot,
hmm
but then couldn't do it. And now we've got Big Shark.
well, it was the airdrop. They had a freaking airdrop. One does not simply do an airdrop and not get their price devastated, you know. You know, we're going to give away coins. It's like that's like the DXY. That's like the US dollar. We're just going to give away US dollars. It's like, well, okay, we'll see what happens.
Yeah.
You know, 100% increase in some cost of goods, 50% on like everything else.
This is
So,
where connecting the dots, folks, taking, knowledge that for me, the shark pattern I'm about to draw out came from years of research of, you know, basically trying to figure out what structures repeated and what didn't. Here's OMG with a perfect shark at the 886. It didn't it just hit that thing 886, didn't it? A couple days
yeah,
ago.
on the crash, yeah, on the scamlet. Yep.
So
I mean,
there's
it's
your shark.
perfect.
Perfect shark pattern, folks. And so OMG, yeah, okay, maybe that's a time to start looking with you got some oversold certainly and that's
hmm
the starting point of a structural assessment for an opportunity for sure. But I had been talking about OMG really since the thing started breaking down, and I was getting very concerned under 12, under 11. And when we broke this B
Yeah,
point,
12 was everything. Or it was like 13, really.
yeah. And once that cracked it, well,
That was blended.
full reset. There's a definition of full reset.
But it's like, man, in this market, it's like you should know, oh, the asset, like there was like this was like a trade setup, like 920 or something was the entry. And from 920, it went up 118% in 40 days. I mean, at that point, and then there's the talk of the like that's it, man. That's like you want to use your intuition and your gut on selling. Yeah, you normally want to sell before airdrops. It's like an earnings report, but it can't. It's when it's run up 100% plus in 40 days, the downside is far greater than the upside. Like it's almost impossible that it would moon from an airdrop after appreciating in value over 100% in 5 weeks, right? I mean, just that's the type of stuff you gotta if you're gonna trade, you can't stick around for airdrops and hold this crap. I mean, it's OMG, dude.
Yeah. And even let's look at, some of the favorites of the favorites, your Metaverse Sandbox and the other
Oh
ones
man,
that
block,
everyone's in
yeah,
love
mana.
with. Well, folks, I mean, the Sandbox could be the greatest thing, and I know some of these guys are saying, "Oh, buy real estate on there because that's going to be the next thing."
Lower
Um,
highs, lower lows since the buying climax,
yeah,
November 25th,
and
below the
so,
200 moving average.
yep.
Sorry.
No, I exactly. And again, you start breaking down. All right. Well, where's your 618? 618 sandbox is 340, 335. Full 886 retest, $1, 105. Now, sure, if you bought this at 10 cents, 20 cents last year, and you're willing to ride that whole thing, you're still up 500%. But here you're up thousands of percent. The
Yep.
whole the thing about that and what we have seen is that we had these huge moves and no sustainability. I mean, that's a spike move. Bang, that's a bunch of mosquitoes being hatched, and then you just have your distribution curve.
And that could take like months. Like it's just like, oh, finally, sand's back to $1, and it's March or April now. Like God, it's like you missed the run. And to try, I mean, to try and long now is just kind of crazy because the lower highs, the lower lows, and the classic distribution that is going on locally. December 7th peak, the 9th, and now the 12th on the 4 hour. It looks bad. It just made the lowest low since November.
Yeah,
Like 22nd. It's just it's not oversold. There's no bullish divergence. It looks like it's setting up for lower prices, and I wouldn't even look at sand till 327, 344 for anything. It just no, big old no until
yeah,
then. So that means that until you even want to look at it again, it needs to lose another 27% of its value. And then it's like you're not even out of the woods. It could still correct. But I'm just saying maybe for a reaction or something. And it's definitely going down there. Bitcoin's going to go to 43K again.
yeah. You're not going to have, if this was going to be some kind of massive new thing that, I think a lot of people felt some of these metaverse coins would go and become like the next Ethereum, or they would go and do a Solana or whatever. But you're not seeing that. And what, if anything, what a hyper trend should do, like that parabolic curve tool, you use that a lot on in your streams. That just the whole. I think this is it. Oh,
Those things end.
yeah, and this is ending. So
They end with buying climaxes and then attempted rallies, which happened on the 29th, a lower high that confirmed there were less market participants owning the asset than they did before on the 25th.
yeah,
It's yeah, and so since then, lower lows, lower highs. Lower lows just recently, literally today, we got another one.
yeah. This is a nasty. Yesterday was a nasty bullish bearish engulfing on sand
Oh yeah, I'm
with
sure. With
with the kind of
Bitcoin.
continuation.
Yep, yep. And there's no support like anywhere. What a
Yeah.
joke.
I know, and a lot of the folks I know, I mean, I think you're joking about Hex, but if you want pets.com, sorry, I know that guy was on your thing, but
Oh, I
and
don't care, dude.
no,
It's
I
up
know.
27% today. It
Yeah,
had
I
bullish
know.
divergence. It's
Huge.
back above some critical areas. It's testing the supply line. I mean, like, what did it do when Bitcoin went up hundreds of percent? So 1,000% actually, over 1,000%. My God, it went from 1.1 cents
Yeah.
um, in April and then got to 51 cents. I mean, like, it's nice candle today, and that's what we needed. That's what we were looking for on it. We knew that like sellers looked exhausted. It looked like you were at a critical area and 95% retrace. You're in do or die territory for the trend, the long-term uptrend, and you got it. You got your move, but it's not enough yet. It's just a good start. So
Yeah, it would take a whole lot of bouncing around to get some construction one day, never makes a trend. And we've
type 2 return right there almost doesn't look like almost. If you
almost
anchored X at August 6th,
you could do something like this of on Hex of, if you go off that last ditch down, you could say X A. Now this is where it gets tricky because the trading is really skewed, but you have to use that as your B point because it's so low, and then come back and grab this secondary peak. That's how you really connect the dots. And so your B point, that's actually almost a 618 qualifier. You would say maybe minimum 786. 886 would have to be your maximum level, which it did get down. So you're at 13 cents. You could say that's a type 2 bat pattern, truly.
Yeah, for sure. That's
Um,
what I'm saying. That's why, like, it's a lower low, unfortunately, but that's okay. I mean,
that is
lower
okay.
low. Bulkowski talks about lower low double bottoms actually can outperform just standard or higher low double bottoms. Interestingly, I mean, with his research, I don't know exactly why,
It could be
but
you see a little mini,
reaction, overreaction, something like that.
we see a mini divergence a lot of times.
Your
Uh,
chart's different than mine. Yours looks way like that. I think I'm just on this hit Bitcoin chart, and yours is like that low where D is the reaction low is perfect. Like mine's substantially lower on December 10th low, this type two. Yours is like literally perfect.
I'm
Wow.
on Tether. I'm on
Yeah.
Hex Tether.
It looks good. It's probably more liquidity on that one too. It looks great though. I mean, that looks like actionable long stuff with that low right there. And it
Yeah,
just, but like he was talking about yesterday, you are starting to get close to being in jeopardy. Like whoever the market, they have to start buying soon. Otherwise, the long term uptrend gets put in jeopardy. They took heed, it seems like, which is really good.
yeah. But you got a lot of structure here. Again, I know a lot of people are critical, and then there's a lot of supporters of it. I don't really care. Just give me the structure, give me the
Yep.
signals, and trace it out. But I will say, like this and a lot of these, that you could go off of that for now. If you're a hodler, good luck. If you're a trader, even I think that's better. But certainly under these levels, like a lot of the other things, weird situations we're looking at, negates the whole deal. And you would have to go back and just go to your all-time chart. And that as really was my point on this.
Hmm.
This is I was going to say this, and I was really going to point out Doge too, because but it's look, folks. I just want to make everyone aware that this that's the all-time history. Okay, for you could look at couple different feeds, but if we don't stabilize here, then this final leg down does the all-time. You have to use the all-time metrics. I feel. Let's really quick Doge because
Sure, yeah, and that makes sense too. But it's just like that is a discernible swing low on the daily, where you initially just anchored there, and that's what makes it so intriguing. Because I mean, like doing harmonics, right? I mean, it's not always about the lowest low; it's about maybe your most recent discernible swing low. And we're just talking about like, okay, this if it's a confirmation low, it's going to probably take you to 35 cents. I mean, to go test that old level, again to see. And it might just do the exact same thing it did when Bitcoin was going through a massive correction. That's clearly inverse correlating again, I guess. I mean, Bitcoin's starting to roll over a little bit. What I'm looking at, because we just bearishly engulfed in the last 4 hour, and you're finally catching follow through. You just had the lowest low of this new 4 hour candle.
mm,
Yeah, you're working on the lowest candle close on the 4 hour. Dang, man, you're
let's
you're
go to
really
spot.
testing. Yeah, you're testing that December 4th candle low close,
Brutal.
and that was the crash. I mean, that's where 42, and then traders settled up at 46.5 on that Friday evening, and you're testing that. You're trying to hold above it, but you've tried holding above it for 4, 8, 12, 16 plus hours, and now you're just testing it again. It just doesn't. It's not favorable price action for bulls right now for Bitcoin.
Yeah, I have a pattern here. I have a crab pattern that's been auto-generated. Okay, but
Oh yeah.
we did not get an ideal type 1. We did not get up to 59.4 on that bounce, which we should have, and then we sail right through the hop. Now this is where just looking at the patterns and then using some common sense, like, all right, we can't follow through. One of the things that I look at is, we should see reaction progress within 30 bars after hitting that level. Well, 30 bars is like there. And that's,
Yeah, we're in a short-term downtrend, so your bullish patterns are going to be less reliable, right?
yep,
And if even if they do play out, they're going to oftentimes underperform. It looks like, on your D right there, it played out, made a lower high, and then dumped again. And it's like, okay, so your trend's bearish, and you're looking for bearish patterns and bearish trends. Something I'd identified, I'd pinged patrons on when it just started rolling over a little bit before even the big move down yesterday morning was the bearish cipher. I'll post to you real quick. Look how well this performed. Hold on. Dealer. Okay, I'm posting it now. This was I identified this yesterday when it just started building that first candle, and it's
Yeah.
outperforming. You know, it's hit ANC and it's below those critical supports now. It's testing them as resistance. Just bearish price action right now. Not oversold on the RSI. You know, no divergent at all. Bearish convergence.
No edge, as you would say.
Yeah, nothing, man. It's just like longing Bitcoin right now is literally gambling, and you're playing the slots. The house has the edge. The house would be the bears in this situation have the edge kind of right now.
Yeah. Yeah. I don't. I think there's a shoe coming to drop. I think there's going to be a shoe that's going to change the fundamental outlook in general. I'm not going to say like a COVID thing, but there's going to be something that's going to come that will bust this through. And once we do, then I feel like we're on. Let me go to like a Coinbase feed or one of the more popular feeds for BTC. But um, you're despite the narrative. All right, the chart. There you go. Bitstamp. It's not that great. Where's the other one? I'll just leave it there. But we have to reach a point, folks, where we have to say that this is, you know, in jeopardy of what you're expecting and what we're wanting to see. I mean, really what we want to see, because we all want to see this move and we want to see crypto become, really entranced and entrenched in the business technological world with all the benefits that it has, not to mention being able to participate in these companies. But we're not seeing that, and that's where I think you know looking at the analysis and kind of being able to respond to your own analysis is so critical. And I will bring it back to the two patterns that really got me into crypto. And I want to wrap it up with this: is that it was a few years ago. It was about 3 years ago, uh, 2.5, that we released our product, our beta product for TradingView, and we really got into the analysis of the S coins and crypto in general because there was interesting harmonic dynamics without any of the relative, fundamental earnings, quarterly statements that you might see from companies. But I knew that these patterns in Bitcoin, we had it in total crypto, we had it in Ethereum as well, were remarkably important. And I have to pull out, maybe I'll post some of the sessions I was doing with my gold members back then, um, to where I'm to the point, and these two patterns basically changed the game for me. It got me to seriously allocate money into crypto because of those back to back bullish bats in Bitcoin. And I was lucky enough to have caught that move off of that second bat, trading that thing. I really traded that. And I will share this with everybody that probably the most success from crypto for me, since really jumping in with this in the last 15 months or more, 18 months, has been my ability to trade it, not hodl it. And you're going to hear the hodl narrative everywhere. And folks, I did this with many coins in the last 12 months, and it's maybe one of the reasons why I'm a little tired at the end of the year. But it's been
Mm-hmm.
really something that I caught this move, and I was getting out on that first move up here and got back in at 29K. Was really scalped this super clean. I've scalped a lot of these really clean. I've entered back into some long positions recently, and I'm holding some longs on Bitcoin, but I'm thinking about dumping it and dumping the whole portfolio and maybe just waiting until I see another beautiful green pattern develop that's auto generated and not even think about it. And that's kind of personally where I am of much like where I was on Doge, and I was really clear on my Doge calls beginning of the year. It was Doge was probably the kindest of all the crypto to me that I was fortunate to get in on. My buddy had been holding Doge for 2 years or more, and I'm like, what's this Doge? And then I started catching really great patterns. I mean, just remarkable
Yeah, it
patterns.
had some insane garleys before that major run up.
Yeah. I mean, look at all the patterns, 4 hour pattern after pattern after pattern. When you go back into here, where was it? And you can't even see them. I think you have to go to the hourly chart. Let me go back here a little bit ways. Try to find.
Super bearish right now, though. Super bad.
Well, yeah, well, look,
Distribution, buy wall, and there's very little support for a long way once it breaks the support.
we just
And the only thing that kept it propped up was an Elon tweet this morning. That's that move up right there. Oh, God. There's a bearish harmonic to boot. Gross. What a downtrend.
yeah, yeah, and then right back down to target one. So it goes right to the XA 886 bat pattern, rejected right down, folks. That is not the sign of a new bullish trend. That's a sign of a bearish short covering rally, and then back
Yeah.
down.
Yeah, buyer induction. Induce the scrubs on crypto Twitter to long because of a tweet. See how it's going to play out for you. It might be a vital learning.
Oh, I think that guy, that the Dodge
Yeah.
guy, the guy that calls himself the first Doge millionaire, unfortunately, I could tell him that I beat him to the punch on Doge, literally, but I've been out and I've stayed out of Doge, and it's really because of this kind of feeling that I have about Doge, where we're going to do an all-time reset. We're almost there. I mean, Doge is well on its way to doing a full reset, and that's around 7-8 cents, folks. And I don't care what you think about Doge, if you like it or hate it. This is just how technicals play out. And the reason
Yes.
why I jumped out of Doge is the same reason why I'm favoring that 886. Is that we had a really beautiful ABCD, all-time ABCD, and this is something that a lot of these, I saw this in the .com with a lot of the .com stocks that were never, after 2002, they were gone. But we saw this over and over again, this kind of phenomenon where you get two equivalent legs, you get an all-time pattern, and that's about it. And there was just a massive AB equals CD. That rolled over, and then it's been down ever since. And so my point with the things like the hexes and the doges of the world that did these astronomical moves, by definition, it's like a natural process. They will have to reset. I don't care what it does from here.
That
But
went 1618, didn't it? On the wick.
on the wick, yeah, the equivalent A to B ABCD
Crazy.
did, but at the exact top was the 1618 was like there at 68 cents, 69 cents.
Of
And
course, 69 cents. Saturday Night Live. It was over.
well,
Hey,
that
can you give me like 2 seconds?
yeah,
This coffee ran through me. I just gotta
go for
I'll
it.
be
Well, you
all right.
go for
Just
it.
keep. All right, I'll be right back.
You got it. All right, I'm gonna go run through a couple more. Great session. Thank you everybody for showing up, and I appreciate Mitch doing it. Give him a minute here, and I'll rip through one or two more. But again, folks, my point and really why I wanted to have this lengthy, just knock it out of the park discussion with Mitch and get his thoughts on it is to really just kind of round out the total argument. That is, let's do our analysis. Let's think for ourselves, folks. What are the charts and the measurements show us? I'm going to go to something I've been highlighting is Cardano. Cardano is definitely was fundamentally supposed to be the Ethereum killer. Ethereum killer. Oh, this is not getting killed. What's getting killed here? Not Ethereum. And go to Cardano. All right, we're going to do another reset here. because we've been looking for opportunities, looking for stuff like, something like a bat. Is there a bat pattern? Can we connect the dots? There's really you'd have to go like there to there, and then Cardano down to an 886. We're there right now, folks. Cardano 120, 886. That's your bat structure. My software is not picking it up, so I'm not really crazy about it. And I go to a 4-hour time frame, I don't have much. Give me an hourly. Now we're off clearly swing 886 off the summer low. Something I've also mentioned in my prior podcast that coincidentally we've seen a lot of bottoms tops and bottoms, but critical pivot points at the solstice, summer solstice, fall solstice, June 21, September 21, coming up to December 21st. Is this an opportunity? I mean, look, Cardano's 60 something percent off its highs. Where does it go? Is it and you at what point do you say to yourself, well, how much drawdown will I go through? Because if we don't hold this structure in Cardano and we start to leak, you break the lows at $1 at 90, forget it. You do full 886s across the board. That's why the next week, 2 weeks, there'll be plenty of time to react. But if we don't see it develop, your 886 on Cardano is at 35 cents. And, I'm not jumping there just yet. But if you want to preserve capital, you want to reduce risk, be aware that this next breakdown, if that comes, there's nothing but air underneath there. That's just calling it like it is. And I think there's been, he's back. Mitch is back. I just think there's been an irresponsible.
Friggin' mic arm just fell. Jesus. Sorry.
Oh, that's Whoops. Right. Just talking a bit about Cardano, the Ethereum killer that's getting killed. And I just talking more so about the larger, what I feel, lack of fiduciary responsibility by a lot of people with bigger followings than me and Mitch that will bark numbers that are, I think 30 years ago, if these guys were doing it, the SEC would have shut them down in a second, in a heartbeat. And that's not happening either. I mean, fiduciary responsibility has been out the window for a long time. But, I really feel like just telling it like it is, being true to the levels, the numbers, shows us what the story's telling us. And something like as sound as Cardano is supposed to be, folks, should be doing a lot better if we were in a bullish crypto environment. If it had held all of the promise that they say of being, the blockchain 2.0, because it's going to be the lowest cost, quickest, everything. You're not seeing it in the charts. Not right now. So just be aware of that and be more inclined to come to your own conclusions, even in the face of what Mitch and I say and other people say. I find it's best listen to a bunch of different people, do analysis, do chart analysis, and then come up with what's right for you. Sometimes you could have some money that you just want, longer term money that you don't care if it goes through an 80% correction. I don't have any money that's like that. But this is the situation we are faced with. And I've said this repeatedly in the past few weeks, is take a hard look at where you were a year ago.
Mm-hmm.
And think about these prices, how much they've gained, how many other people who have changed their life in the last year. Got to remember, though, that this is a constantly moving ball that can give it back as easy as it gave it.
100%. Yeah. You got to be grateful for what you have, expect nothing, be grateful for everything. Right. So, yeah, I mean, you got to realize profit at some point, even if you were holding through all that, which I mean, I made a massive liquidation last May at 56K, which I kind of felt like, dang man, I made the stupid decision of buying real with some of that capital when it went to 69K. But look at it now; it's well $10,000 below my liquidation price from this May. Um, so I'm okay. Like, this market's going up and down. Real estate's a lot more stable. So you know, you make some serious life changing money with digital currency. Nothing wrong with realizing it, paying taxes, and then reallocating to something that's going to be far less volatile. And that's just whatever. And you keep working, you keep doing your thing, you keep acquiring more crypto. Eventually, at better areas of value. Because if you made life changing gains, you did the right thing. You were buying in at areas of value. Dollar, $3,000, $10,000 Bitcoin. Heck, man, $17,000 Bitcoin. It was
I,
good, right?
yeah, I
So,
remember. I remember you were talking about that, and I remember you didn't. And it's a great lesson too, because it's really easy to get caught up when things are flying,
mhm.
and I know you were like, man, I got to get my apartment, and I got to sell some of my Bitcoin off, but I do need to take some profits no matter what happens. And
It was a way to make me do it. It was like I wanted to do it for that reason because I didn't want to be like, just paper gains on a hold account or something. It was a huge trade technically too. You're being irresponsibly long and all that. It was just I don't know.
was
It
about
felt
this.
good converting, literal Bitcoin to cash to real estate. It was like no matter what happens, this capital will always be there.
Well, as long as you take it. And I felt because that was happening at a very similar time as the Doge thing had gone down for me, and I had monster. I had millions of Doge, and I was sitting there, and the Elon Musk thing was coming, and everyone's like, "Yeah, it's gonna go to $1 by SNL." I'm like, and I'll retweet some of my tweets from back in May, and I was like, I'm gonna be out of this thing by Friday before Saturday Night Live, and I said, I also think that you're at like the maximum exposure moment, and even though everyone was talking about it, I felt like this is the jump off point, and I have to be okay with it, even though it wasn't easy to just say, all right, time to take it off. But I come back to there's a scene in the movie Wall Street, and sometimes I'll come back if I'm in a crazy move. I'll think about this. There's a scene in Wall Street, the movie, where um, in the they're running a stock, and it's Teldar paper, or no, it's Blue Star Airlines. So Blue Star is running and running, and they got their whole guys into it, and they're gonna screw Gecko on the Blue Star. And right as the market's up, and all the people are making money, and they think, yeah, this Blue Star is amazing, and Charlie Sheen says, time to dump. And his buddy who was in on it, he's like, yeah, we got to get a Blue Star. Oh, another 20,000 out, another 30,000 out. And that scene to me in the movie is something I think about when I get into these crazy, uh, you know, moves like the Doge or the Shib, or a lot of them where I was like, all right, 50,000 out, 70,000 out. And think of it in that way, because you have to be able, when you get caught up in those frenetic times, that you need to be thinking the other way. And a lot of times it's not easy to pull the trigger. You can get stuck on it. Crypto's been amazing this year with some of these runs where, as I said when I started today, I said I didn't pull the trigger as much as maybe I should have. And your experience with the Bitcoin, because hey, when you were selling Bitcoin, Mitch, it was a foregone conclusion that was going to 100,000, right?
Yeah, I mean, it was kind of just like it was interesting timing. It was a lot of it was coincidental and like where I was in life and what I was doing. I mean, it was like early May. It was between the 7th and the 10th, one of those days. where it was 56K. I mean, I didn't like, I was kind of optimistic. I was like, hey man, if we can capture prices above 58.3 again, we could very well be going to like 61 to 64K again. And we tried on the first, we tried on the third, we tried on the ninth and eighth, 10th, failed all those times. And then on May 12th, you had that back test of the old February high as time, made another lower high, and a crash ensued. But like, yeah, it was just kind of, we had run up, tested that level and failed so many times. Just, oh man, this is, no matter what happens, man, if this is gonna right here, gonna be set. I'm realizing the gains no matter what here, just because that was like when I was purchasing the next property and all that stuff. So
And
yeah,
and that's, look, this is real stuff, folks. And this is where rubber hits the road, where making some of the most difficult decisions of taking profits at times can be challenging in the face of an overwhelming narrative and a bit boy screaming 300,000 and a Pompliano screaming 500,000 and who's the other guy saying 12 million Bitcoin by 2030. I mean, come on. I mean, 2030, great. Who is the guy that's calling for? There's a guy calling for $12 million a
oh,
Bitcoin
I
by
have no
2030.
idea, man.
I saw,
That's stupid. So
yeah,
dumb.
but this is what, look, if you go out there in the world and you're looking for ideas and things, people are encountering this all over. We're the exception. We are not the norm. We're not the mainstream. We're the exception to this. And it's a lot, it reminds me a lot of old school Wall Street, old school brokers, how they were when I first came on the scene in the 90s, trying to do my thing against that norm. And a lot of the guys that I knew were working for Wall Street firms are gone, long gone. Not even, not even in the industry anymore.
Hmm.
So, you know, I'll get to that another time. I really think, though, what our point for discussion today, and I want to thank Mitch again, was really, when I asked him and talked to him about having our discussion, I said, let's get this hammered out. So, and let's have a real drawdown on what we're, real discussion on where we're at and what could possibly take shape. So, Mitch, for that, I thank you. I want to thank everybody for being here. And, really, we're trying to communicate reality. And I think Mitch and I personally have found that in our own work, and we want to share that with everyone else. So again, Mitch, thank you, and look forward to next time we will get you back on here again.
Yeah, anytime, man. It's fun. And this is not work. This is literally like, this is like actually a hobby. Yeah, some people don't even get that. It's like, you work so hard, Mitch. It's like, do I, or do I play so hard? Because like shooting the s about charts, technical analysis all day is something that I enjoy. I built my life around it. So, yeah, man. And then talking with someone like you, shoot, man, it makes it like way more fun. So, I mean, that's like why my entire Discord community started. I had no idea any of this stuff was. Just started it because it's like, hey, there's a lot of people that need guidance. A lot of first-time market participants getting in crypto, never participated in traditional market in their lives. They were susceptible to scams. They were falling for scams, and there's like gotta be, there's just not enough people out there that are trying to help people. It seems like everyone's trying to like gain people's trust to screw them versus gain their trust to show them like maybe a way to size up how you should look at charts in crypto, and maybe it's similar to traditional markets, and that's all we did. So, yeah,
Well,
man, just
I want to show everybody where to get with Mitch. Go to Mitch Ray TA on YouTube. Get with him. I'm glad you're taking. I think you're taking one night a week off now. Is that true?
it just depends. Like sometimes no. It's funny. Brad found this website that shows you like your long-term YouTube analytics and stuff, and I found out um, I have 1,533 live streams on my channel. We lost the number. So it's been around since like August of 2018. That's when this channel started
Wow.
creating content. And yeah, so the average, it said on the website, 6 days a week. I guess over the time, these years, 6 days a week, even though most of the time I am doing seven. Sometimes I'll take vacations and all that. I've been, when the market's lulling, it's like I have the opportunity to take off, right? But when the market's going insane up or down, and that's when I'm always putting in stupid hours just to keep people updated because there's a lot more demand for the in the now analysis, So
Yeah.
yeah, it's been a long road, man, for sure. There's
I
Chalen. He created the thumbnail for the stream today.
I
He's in the chat.
tell him I said thank you. I liked it.
No,
Um,
he hears you. Yeah, for sure.
awesome. I appreciate it. And I again, um, this is my 20th podcast of the official Harmonic Pattern podcast, and I'm kind of jumping into it. But I think if you're looking for technicals, I say go to Mitch. I say go to Mitch before me because my stuff is, you need to have a basic understanding of technicals. And that's why I think both of them, if you want to get into the markets, you got to realize, listen, you got to give yourself a couple months. You got to get charts in front of you. You got to get exposed to it, and you got to listen to people like Mitch or myself go through the levels so you know how to develop this lifelong skill. This is a lifelong skill we're talking about, folks. I'll be trading until the day I die. And, hopefully that's another 50 years. So for me, I'm going to do it the harmonic way. And I just want to kind of let everybody know you can go to harmonictrader.com, simply register as a basic member. It's all free. And then my books, to get started, you can download my PDFs for free here and get with the software, get with the videos. There's probably 30, 40 hours. And then the gold member page has like another 100 hours of stuff. And then Discord. And I'm doing Discord because of Mitch. Mitch really, you showed me the way on that one. So just click the link and jump on over. And we got a bunch of people in there, 200 in
And
there right now. We just got that started last month. So again, I think this is the way to go. And you have any questions, everyone can reach out to me, harmonictrader at Gmail. And we'll get Mitch. Maybe we'll get Mitch back here next month to get the markets rolling and check back in. But
yeah, dude, anytime, man. Any literal time you want to shoot the S, just let me know when you can tolerate me some,
yeah,
and I'll be happy to show up, dude.
yeah.
Got
Maybe
a,
I'll get
a
on
schedule.
get with you before the year's out. Maybe
Yeah,
one
and
night.
also with your Discord and stuff, I don't see, in your description any invite uh anywhere, right? Like in your like big bio thing where you need to have that there. And you
Yeah.
can also the Discord link, you want to pin that, in the chat, like the beginning of all your live streams.
Yep.
You just like pin the link or you post the link at the beginning of the stream and you just pin it to the top and so people will have access to it the whole time. It's very visible. Uh yeah. So
Definitely, I'll do that.
dang, man, we got more likes than viewers now. I think that's a freaking good stream, man. 320 likes. Let's go.
Awesome.
Fantastic, man. Yeah.
Excellent. Well, Mitch, thanks again, everybody. Appreciate everyone coming today. And I want to wish everybody happy holidays. And again, you guys can check back me. I'll be here. I'll be back on Thursday at 11 a.m. Eastern on my channel. Mitch will be on his tonight at 6 p.m. Eastern or a little after 6 p.m. Eastern. Usually he's on there. So hit him up, and then we'll check back in. You guys, I'll talk to you guys on Thursday. So again, Mitch, thanks so much, and we'll catch everybody. I'll see you guys on Thursday. And until then,
Yeah.
have a great one. And as I always say, go get them. Thanks again. Take care.
Merry Christmas.